Hey friends, many of you don't know this, but I originally started purchasing shares of Johnson & Johnson, ticker JNJ, back in 2001. Also, I started purchasing shares of PepsiCo, ticker PEP, back in 2001. When I reflect on my experience with these companies, I have nearly a quarter of a century experience investing in these two dividend stocks. In fact, way back in the day, I envisioned a portfolio where these two stocks were really the whole portfolio, more or less. Now, I sold those original shares I acquired starting back in 2001 to buy our first home. So my modern position that I own right now in JNJ and PepsiCo started in 2011. Still a long time ago. But in some of my recent videos, you've seen even me, even with a quarter of a century nearly experience with these companies, starting to cast a little bit of doubt, starting to have some worries with these particular stocks. I want to go through that in the video today because this ties into the psychology of investing. I want to talk about this concept here of getting started with investing right now in 2025. And it's not just for new investors. It's for investors like myself who have been doing this for a long time, but with each new year, we're starting again. We're restarting. We're starting up with a new journey each time the calendar turns to a new year. And so I have a lot to cover today. I want to share the first slide on the screen with you right now. This is probably my favorite slide of the presentation today. So, when I started investing, as I said, I thought JNJ and PepsiCo could be my entire portfolio. Why am I scared to buy right now? Yeah, I've been buying more shares. My patrons know this. I'll link in the pinned comment below to my Patreon. And those purchases, though, they've been a little bit smaller, and they've really been there to kind of hold my positions. Now, keep in mind, both PepsiCo and JNJ, they're about 7% of my portfolio each, plus or minus 7%. And so because I've been buying other positions like SCHD, I'm just throwing a little bit of additional capital to JNJ and PepsiCo to kind of keep them around 7%. But why am I scared? Why am I scared to bring these stocks as I approach this new year, starting over each year? I'm starting over kind of with a new chapter in the book. Why am I scared to buy these stocks right now? Well, as you can see on the screen in front of you, I've shared a laundry list of fears over some of the recent videos. And some of those fears span RFK Jr. In fact, this may be no fear because the CEO of PepsiCo just came out saying he believes that there's going to be minimal to no risk with having RFK Jr. dictating the health of our country. The CEO actually of PepsiCo is saying this is probably a good thing because PepsiCo is ahead of the pack. They're a leader in their industry. They can make this work. What are some other risks I've been citing? Well, the treasury yields are high, and so I was just citing the risk that, well, investors may opt for treasuries instead of dividend stocks like PepsiCo and J&J. Obviously, I've cited weight loss drugs. These could cast some risk to PepsiCo as consumers just eat less, eat fewer snack foods. And litigation risk. This applies more to J&J. But again, as you can see on the slide, even with my modern position, not going back to 2001, but going back to my modern position that I own to this day, that I started building in 2011, I started buying J&J at $58. I started buying PepsiCo at $63 and change. Yes, these risks here are real. And because of that, I need to take them into account and diversify. But as I highlight in yellow, at a certain point, I need to say whatever to these risks. I need to pursue my dream. I have to have the confidence that I have been following and investing in these companies for 24 plus years. Look, I'm a thug life investor. I take all of the information that is available into account. But ultimately, I need to come from a position of strength. I need to come from a position of conviction. These are the two stocks at one point that I thought could make up my entire portfolio more or less, and I'm just going to hold them at 7% plus or minus each. No, I need to think outside of the box. I need to expand how my thinking is for 2025. And yeah, my primary goal is SCHD. Many of you already know that. I have other goals in there, like adding to Realty Income and Chevron if it dips in price again. But I should not forget JNJ and PepsiCo, the two stocks that I love the most, perhaps, that I have been investing in since those early days, that I understand, that I value their stability. I value where the yields are now. The yields on both of these stocks are really good. I cannot lose sight of this, and I need to come from a position of strength. It's taken me a while to kind of get here, and I'm sharing this. I'm sharing this on YouTube because I'm real here on YouTube. I am sharing that as I start a new year, even though I've been doing this for so many decades, I'm starting fresh again. If you're investing now for the first time, or if you've been at it for a few decades like myself, it is easy to fall into this trap of casting doubt on your own strategy. And it's just something to keep in mind. And of course, I take all of the information into account, but it's just something I noticed. Check it out on the screen right now. I want to just share some metrics with these two stocks really quickly. But as you can see on the screen in front of you right now, PepsiCo, let's start with that one. It is trading at a forward PE of 17 on 2025 earnings estimates. It is trading at a starting yield of 3.63%. On average, they have been growing the dividend by 7.2% per year over the last 5 years. Johnson & Johnson, as you can see on the right-hand side of the screen, in my opinion, other than the yield, it's even more exciting than PepsiCo. It is now trading at a forward PE that has dipped into the 13s. It has a starting yield of 3.38%, and on average, they are growing the dividend by 5.5% per year in perpetuity. You may look at this if you're a higher yield investor and think, Ian, these yields just aren't good enough. But I am coming from a perspective that for me, this is what makes me feel comfortable. These are sleep well at night stocks. I do not believe they're going anywhere. They will predictably pay out these dividends and continue to grow these dividends over time. Yes, I am delaying my financial independence, retire early or FIRE by investing in these types of stocks, perhaps versus ones that might be yielding higher, like 8 to 10% range. But I'm speaking to my personal situation, my personal journey, my personal risk tolerance. And I can't remember a point in history where these two stocks were trading at these kind of yields. And for my personal situation, given the dividend growth rates, given the starting yields, these kind of work for me in terms of being respectable starting yields that I feel good about. Now, with J&J, I want to share on the screen in front of you, as you can see, they just announced their earnings for 2024. I thought they were great. But for 2025, they may be even more exciting. What I'm really excited about that you can see on the screen right now is their forecast. They are forecasting and guiding for 2025 that they see adjusted operational EPS, earnings per share, in the 1075 to 1095 range, reflecting strong growth of 8.7% at the midpoint. 8.7%. This may be a very rare case here with J&J. Not only is the company growing 8+% on an EPS basis, but the forward PE has dipped into the 13s. It is a respectable starting yield over 3%. It has a low payout ratio. I have to just look at all of this information and kind of be, Ian, yeah, there's a laundry list of issues and challenges with both J&J and PepsiCo, but I have to take a step back and look at my 24, 25 years experience with these companies and just factor that into the equation as well. Needless to say, I'm excited here to amend, to revise my strategy for 2025, to put a little more emphasis on these two stocks than I was originally thinking. It took me a while to get to this conclusion, but that's why I'm sharing it here, because this is real investing here on YouTube just for the community to see in real time. But I have a few more slides I want to share with all of you. If you're at home, you're kind of getting started with investing in 2025, or you're looking to kind of get restarted. Maybe you had a slow start to the year like I did. This video is for you. So as you can see on the screen in front of you right now, the next slide that I want to cover is going to talk about timing. And so one realization that kind of I had this year, this gets a little bit into life and investing, it's all the same, but there's no perfect timing. Momentum builds with a single step. And so this was kind of a slow start to the year. I had a holiday hangover, if you will. Someone coined that term in the comments. Thank you for that term. That really kind of helped me come to terms with what I was experiencing. But I'm finally moving. In fact, I'm going to link to it in the pinned comment below. I have my video that I did on kind of my slow start to 2025. I'm glad January's almost over. I just want to get into February, get on with this year at this point. But it's been a slow start, but I was so thankful to hear, I guess thankful in the sense that people could relate to me. I got a lot of comments, and even personal friends of mine who I chatted with on the phone, they're like, you know what, Ian, I saw that video you did, which I'm going to link to in the pinned comment. And they're like, Ian, that's how my 2025 has been as well. And so it seems like others can relate. But as you can see on the screen in front of you right now, I want to bring this just kind of back to practicality. Look, 2024 was a good year. Holidays were busy. They were expensive too. The beginning of a new year can be daunting. It can be a hard time of the year to start anything, including investing, even if you had been investing before. The challenge, sometimes it just gets into your head. I think a lot of this news out there, I'm going to get into this later, but a lot of this news that casted my own doubt on my two kind of cornerstone positions, a lot of it had to deal with just social media and negativity. Taking our modern life into perspective, a lot of that negativity on social media, a lot of that doubt, a lot of that worry, it's there to obviously generate views, but it also can have a negative side effect. It can really put someone like myself, or maybe some of you watching can relate, it can turn something into a bigger challenge, a bigger obstacle than it really is. For me, I just need to remember to get started. There's no perfect day to start out other than the present day. I can't forecast the future, but I'll just keep dollar cost averaging. I'll keep dollar cost averaging into the future despite the risks, taking those into account, but knowing my experience as an investor and coming from a place of strength. But I have more to share. As you can see on the screen in front of you right now, the next slide that I want to cover really goes through following the right people. I touched on this in the last slide just verbally. There's a lot of negativity. There's a lot of junk out there. There's a lot of stuff that people, maybe they think it's motivating, but it's not. If you're looking to get motivated in 2025 or stay motivated, whether it's with your investing or really with anything else, I suggest following people and communities that motivate you to follow your own journey and are empowering. I'll start with this. Comparison is the thief of joy. This is a quote from President Theodore Roosevelt. And I see this all day long on platforms like Instagram. People are living this fancy life. They're living their best life. But I'm here to say it's all fake. In fact, I want to take an example. Real estate. I work in the real estate industry. I develop real estate. I acquire real estate, and I have a lot of experience with it. And I also invest in REITs like Realty Income. It's up there on my list in 2025 as one of those cornerstone positions I want to build because it's yielding right now nearly 6%. It's not a qualified dividend, but nonetheless 6% on Realty Income with about 3% growth per year on average. I will take it. I kind of look at it like a treasury bond, but with some built-in growth over time. Anyway, the real estate experts out there on Instagram would make you think that you could become rich overnight in real estate by acquiring a property, by building a property, by taking their course, by investing in their real estate syndication. In my experience right now in 2025, in my humble opinion, I'm sure there's people doing it. I'm sure there are these corner cases, but on average in the real estate industry with higher interest rates, with a more efficient market, with landowners and property owners knowing their worth, knowing what their property is worth, with the cost of construction sky high, with a lot of fees, regulations, kind of hurdles that a developer must overcome. What I have found, generally speaking, right now in real estate is cap rates. They're not so dissimilar from what investors can achieve just investing in REITs. And so it used to be that by taking risk and buying a single property, going out there taking single property risk or developing a single property, the real estate developer or investor could do a lot better than just buying a REIT like Realty Income. But right now, what I am here to say is the returns are not so dissimilar. Now, the benefit of buying physical real estate is there's more of a concept of leverage out there, and there could potentially be tax benefits via accelerated depreciation. In terms of just friendly disclaimer, I'm not offering any kind of investment or tax advice today. And I'll have my full disclaimer disclosures in the description below and at the end of the video. But in general, at a high level, the returns, they're not so dissimilar. But going back to this is why I'm so excited about Realty Income here. But going back to Instagram, these gurus, quote unquote, would make you feel like you could become wealthy overnight, taking their course, investing in their project, so on and so forth. But what I've summarized is they're making money from the investors by getting them into their deals. The returns, they're kind of market averages that the investor could get in a more diversified way, just investing in publicly traded REITs. And so food for thought, but I see that stuff on Instagram and I see the hype, I see all of this, and it is just off-putting. And so what I'm here to say, if you're new to investing or you're rediscovering investing this year, you're getting started this year in 2025, be careful who you follow and try to follow the real ones. And so with that, as you can see on the screen in front of you right now, I have a few suggestions. And so the first one, obviously, is PPCE and dividend stock investing for everyone. That's the channel you're watching now. And in the comments section below, you're going to find a great community. I have a Patreon as well, which I'll link to in the pinned comment below. We just did a meetup last Friday, and I don't quite remember how many were there, but I think it was like a record meetup. This was from my corner Patreon tier. I think there was like 8 or 9 of us. It was a great meetup. It was really well attended and a lot of fun. We got to talk stocks, but I'll give you another one. Blossom Social. I've talked about Blossom Social here on this channel now for a while. It's a platform, though, that is now adding quite a few new users daily, from what I've heard from my friend Brandon Beavis, who started the company, co-founded the company. It is a social media platform just for investors, and it has a huge segment of dividend investors. So when I approach this year and I'm looking to remind myself of my own values, I'm looking to get some of that fear out of there and just remind myself of why I'm doing what I do. I need to surround myself with the people in this community and the people on Blossom. I have not really seen anything negative on Blossom. It has been a pleasure. It is a unique platform. There is no hype. It is realness. And I will link in the pinned comment below to my affiliate link. In terms of full disclosure, I am an affiliate. If you sign up on my link, I do get compensated for that from Blossom. And it is a free platform to use, though. There are paid versions, so you can pay money to get a more premium experience, but it is free to get started out there on Blossom, to my knowledge at this time. Okay, I want to keep going. As you can see on the screen, I've got a lot to cover today. I'm kind of talking about strategy, psychology, just the struggle, what it's like being an investor in this modern era. And I want to talk about surrounding yourself with the real ones. And so I have some information here just about my friend Ryne Williams. And so Ryne, Retire with Ryne, I'll link in the pinned comment below to his YouTube and his Instagram. He is a friend of mine. I met up with him in Las Vegas, actually. We met up in Las Vegas last summer, and I hope I get to meet up with him sometime in 2025. He's over there on Blossom too. But Ryne, he's been posting his runs over on Instagram, and he doesn't do it in a way where he's bragging like so many people out there who are trying to sell a course or hype things up, anything like that. No, he is one of the real ones. And so as you can see on the screen, I hope you follow him. I hope you subscribe, because he's one of the real ones. He's a lot of positivity and growing his dividend portfolio really quickly. He shares all his kind of stocks and positions. It's great. But anyway, he shares his running, and it's been a while since I've been running. I've bulked up a lot. I gained a lot of muscle, but I need to kind of trim down at this point, to be honest. And he motivated me to get started. Thank you, Ryne. Finally, I'm nowhere near what he does, and I don't think I'll ever be at that level, to be honest. He's really fast. But anyway, I did 2.7 miles the other day at about 10:30 per mile, and it was something. It was that first step. It was the first step in the momentum. It was a line in the sand. I went to F45 now with my wife 2 days in a row. We're building momentum. I'm surrounding myself with encouraging community that's real. I'm staying away from the fakeness. And I just want to say to all of you out there, as you're getting started or restarting with your investing, with your life in 2025, if you kind of started the year slow like I did, You can boost it all by surrounding yourself with the right community. And if you enjoy this community, please share in the comments below. I read all the comments. I try to respond to most of them. Not all of them these days. It's just too hard to keep up, but I do read them all, and I appreciate that. Thank you for being part of this community. I always try to keep it real here with all of you, and Ryan is doing that too. So thanks, Ryan, for getting me running. And honestly, it's all related. I have to stay in good health to be able to enjoy my dividend stocks over the long term, to even make it to the finish line. I have to be strong. And I built some of that muscle, but I lost some of my cardio capabilities. I got a little too much kind of excess fat on the body. I need to burn it off a little bit. And so I got to incorporate running into the strategy again. And it all started just with that first run. It was a slow run, but I'm so proud of it, more so than many of the longer runs that I have done over the years. And so with that, I have one more slide. As you can see on the screen in front of you right now, the last slide is just defining your goals and pursuing them. Your goals should be unique to you. I wanted to end with this one because, look, my dividend portfolio yields about 3.67%. My corner patrons know that. I share my portfolio on corner Patreon, corner tier, percentage allocation to each position. Funny enough, my favorite ETF SCHD, it's kind of in that range. And funny enough, right now, JNJ and PepsiCo, they're kind of in that range too. Look, there's a lot of dividend investors out there who get much more on their money. They could take a portfolio like mine and instantly generate 8 to 10% and do much more cash flow than I am. By contrast, there's a subsegment of dividend investors who have a lower yield than me, but they're enjoying much more capital appreciation growth over time. I have found that kind of the range I'm at, this 3.67% range, maybe I'd like to get it up closer to 4% if I can over time, but realistically, I don't think it's going to happen because I'm not buying the high yielding sin stocks this year. In fact, they're going to lessen in percentage contribution to the portfolio because I'm selectively reinvesting those dividends elsewhere into other positions like SCHD, Realty Income, JNJ, Pepsi, so on and so forth. But anyway, the reason I'm sharing this is I've defined my own goals. This is what I'm comfortable with. When I retire off of dividends, and already I'm using dividends to help kind of live a semi-fire, if you will. I kind of use the dividends these days to pay for certain things, and it helps me scale back just a little bit. I still work really hard, really long hours, but not quite as many as I did maybe 10 years ago or so. Those were the days I was up till 3 a.m. every night working, and I was in not so good health. But anyway, this is what I'm comfortable with. And so when I continue to go on my path towards semi-fire or when I reach full fire, for me, kind of 3.67% yield on these quality brand name stocks. This is just what I'm comfortable with. I've defined my own goals, and I need to surround myself with the motivating factors that just help me keep going towards that and be true to those goals. So as you can see on the screen in front of you right now, I've defined what works for me and my level of risk tolerance. I highlight that in yellow. It may not work for you. You're probably going to look different than me, but you got to tune out the noise. You got to make small trades and build momentum. I'm going back to my roots, and I'm going to keep buying my goal positions like SCHD and Realty Income. But anyway, a bit of investing today, a bit of psychology, a bit of kind of just life strategy. I hope you guys appreciate it. If you do, please do click the like button. It means the world to me. And I'll link to my social media profiles, to my Patreon, where I have 2 different tiers. Corner tier has the portfolio and the meetups on Zoom, and the portfolio is percentage allocation to each position. Link to it in the pinned comment below. I really appreciate all of you. I can't wait to see you in the comments. All of that Blossom link, in terms of full disclosure, I am an affiliate of Blossom. I'll have that link in the pinned comment below. And basically, I'll close out. So in terms of a friendly disclaimer, I am long the positions mentioned today. I'm long SCHD, my favorite ETF. I'm long Johnson & Johnson, ticker J&J, PepsiCo, ticker PEP. I'm long Chevron, CVX, Realty Income, ticker O. I'm also long Treasuries. I own those positions in my personal dividend stock portfolio. Before I go, in terms of a friendly disclaimer, this is not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey on YouTube for fun and entertainment. It's possible to lose money in the stock market. Before you go out and invest, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. Also, in terms of a friendly disclaimer, today's video, it's not tax advice. I'm not a licensed tax advisor. Please consult your licensed tax advisor before making any tax decisions. I love you all. Thank you for watching. I'll see you in the comments below, and I'll see you in the next dividend stock investing video.